Good afternoon, everyone. Today I'm joined with Geordie Mark from Bluejay Gold. Folks, Bluejay is a new issuer on the TSXV, and we love them because they are a spinout of Riverside, who we've had on the channel many times in the past. Well, Bluejay has put together a restart project in the Yukon. They have the Stellar project, which has nearly 1 million ounces of gold at around 8 grams per ton. So today we have Geordie on to talk about what the plan is to prove up the resource and eventually work towards getting the asset back into production. All right, everybody, enjoy the show. Geordie, it's great to have you back on.
Yeah, great to be back on, mate. Lots have happened. Lots have happened
Yeah.
since we've been here.
And it's timely given the recent news about the go public, and also you are a former analyst, and I'm sure you have thoughts on what's happening in the gold market right now. So when you look at all this volatility, and it seemed like we were pushing north of five, well, we certainly were pushing north of $5,000 there for a while, and now we've pulled back into the $4,500 range. Who knows where we will be sitting in a day or two when this video goes live. But I'm sure you have thoughts on all this volatility. What's going through your head?
Yeah, it's a great consolidation phase. I think the underlying picture versus what we had in, we'll call it early March, hasn't really changed. The broader thesis in the end, of course, obviously, issues around Middle East, etc., concerns around sort of inflation affecting ultimate rate cuts from central banks around the world. But that bigger picture is still there. The bigger framework around where we see those rates going is still there. The uncertainty globally is trade wars still there. So there's a lot of mosaic around commodity price, gold price sort of value. That being said, the industry is and the producers sitting very well in terms of where the current price is versus operating margins. You're seeing record free cash flow coming out of producers, and we've had a really good period of 18 months of free cash flow growth, reduction in net debt positions or increase in net cash positions for the producers, and that's been echoed in their share price, echoed in yields and share buybacks. So very strong sort of growth, certainly on their equities and on their balance sheets. And right now, I think we've seen that growth that's been sort of fostered by growing commodity price. So commodity price has been able to move operating margins, has been able to move cash flow, net income, free cash flow generation of producers over the last 18 months. I think now over the next couple of years, we're going to be looking at producers moving to a more proactive sense of needing to show growth potential in their production to deliver ultimately more cash flow. So you've got to remove that tether from gold price action up to something that moves across in terms of commodity price growth. And I think production growth. And I think you saw some of that sort of coming out with Equinox and all the sort of combining. You're looking at now Agnico buying and consolidating assets in Finland, some other transactions of producers in Australia recently. So I think the next 2 years we'll start to see consolidation now moving downstream and into consolidation of assets and safe jurisdictions that can be added to the balance sheets of producers to show potential for production growth over time. And I think that's what we've tends to see in terms of cycles. You see consolidation of majors, consolidated intermediates. You're left with a void of producers, and ultimately you'll start to see more producers, more consolidation of those development stage companies that have good assets and good jurisdictions. And you see that cycle over and over again. So I think the next 2 years, it's going to be very exciting for companies in the sort of advanced exploration through development stage in terms of potential acquisition and consolidation of like companies.
So let's get into Bluejay. It's been a while since we've had you on, and you're a new issuer to the public markets. There's going to be people that are completely new to the story. What's the high level overview for them?
Bluejay, we're expecting to be listed in the next couple of days, so very exciting for us. And Bluejay is a new company, but we're focused on brownfields, high grade gold resource growth. We have around almost a million ounces of gold in the Yukon, grading around about 8 grams gold equivalent. That's around about 12% silver, and the rest is gold. So high grades. The thesis for Bluejay to have formed ultimately is to get assets in brownfields areas that exploration can really elevate former workings to discover more resources. So that's what we're really keen to do at our prime project, which is at Stella in the Yukon. And the Yukon's really gone gangbusters the last 18 months in terms of more focus, exploration success, and I think more eyes in terms of a jurisdiction for focus on investment dollars.
So there's something that I think investors are going to find particularly of interest, and that is the fact that you guys also acquired a mill with the project. Is that accurate?
That's right. Stella was a former producing asset in the 80s. So from 86 to 88 produced roughly 80,000 ounces of gold. They consolidated that whole field, so you had a whole district scale sort of mineralization on the footprint, about 170 square kilometers. And it's still, we have the processing plant there. We've got a 50-person camp, technical services workshop, and a field of around about 120 kilometers of historic core to reevaluate. So very good package of infrastructure and historic drilling to bolster our pathway forward for exploration, resource growth, and new discovery. What I really like there is an hour's drive from Whitehorse. So you're not too far away from a capital city, 40 minutes drive from the railhead, and the railhead connects to a US port at Skagway. So we're fantastically positioned to be basically an exploration company looking for resource growth and new discovery that you can just drive to. So you don't need helicopters, fantastically positioned.
So I've had Peter Morone on a few times, and he's obviously had some major takeouts from Yamana to a recent one, which the name escapes me. But something that he talks a lot about when it comes to assets that make sense is that close access to infrastructure, the ability to drive to a property. You don't want to have to be, trucking around massive loads of ore to go get it processed. So you guys have that in your favor. But we are talking about an underground mine here. And another thing that Peter talks about is strip ratio and what that looks like. Obviously, that doesn't apply to you guys. But I'm curious here, uh, how much money would it take to get back into production? How much capex do you think we're looking at to get this thing running again?
Yeah, the operating plant is there. We're at very, very early stages. We think we're more oriented towards, looking towards trying to find more resources in the very near term because, we've got almost a million ounces, so that's great to have. But we see a lot of step up targets for resource expansion. And then that's really what we're focusing 70% of our expenditure this year on testing expansions to the current resource base. And maybe by the end of the next year, 2027, we'll start to look at the scope of the scale of operation that we could potentially sort of come into. So I think it's a little too early to talk around what the exactitude is of the numbers, simply because we want to give a chance to actually right size a future plant and operation design. We've got 7 kilometers of underground development already in place. But if we can show resource expansion, then we want to actually be able to design something that is actually consistent with that. And that gives you an optimal capital deployment and a deployment ratio to give you the best potential payback. Now, in that sense, it doesn't mean that we are just waiting until then to do the work that's required. Certainly the baseline work is starting now. Other metallurgical work will start now. So you're still not losing time to capture in that window. Just we think ultimately we should actually give the project a little bit of a go ahead to be able to let's try and capture the best economics we can and scale up operation value we can for the shareholder.
So I think anybody sitting at home watching this is probably intrigued when they hear that this is a former operating mine. Really not that long ago. It's not like we're talking about a former operating mine in like the 1920s or something. Uh, but their question is probably going to be, well, okay, it was operating. Why did they stop operating the mine?
Yep, certainly. Gold price, obviously, this was stopped in '88. Gold price was obviously took a dip after '87, etc. So there's a bit of a moment there, and ultimately, I think they ran into operations very quickly as well. They had a great discovery up at Mount Skookum. They went into operations, and I think commodity price got out of the whack there for them at that stage. So I think, and being an analyst for 17 years, seen a lot of projects over six continents. The opportunity for us now ultimately is to be able to show more growth, give yourself a longer life of mine potential, to be able to, lower risk in terms of when you're coming into capital deployment. So operations back then were producing pretty good metallurgy in that operation with 95% recovery. So I think ultimately we're looking pretty good there to get out of the gate and show more resource growth.
So how many tons a day was the mill producing when it was last in
I think
operation?
there was roughly 300 tons per day.
Which for high grade isn't bad.
Yeah, they were running 13 grams at that time around then. So it's kind of the scale that they wanted at. We see a opportunity, obviously, with what we have already. You would probably put it, a couple of times higher than that already with what we have, in terms of if you're looking at from my analyst sort of background, when you look at PEAs going economic studies, what makes sense for capital deployment, you're probably looking to try to get at least a 7 to 10 year sort of life of mine plan out there. So scales of production, if you're going to look at it, that makes sense, in this economic environment, probably around about 70, at least 70 to 100,000 ounces a year type of framework. So that gives you a sense of where you should be in terms of scale of operation, duration of my plan, and total life of mine production minimums to get to a certain threshold. That makes sense.
Now, if we think about it from a risk perspective and in terms of that operating plan, I'm thinking of some of the restarts that we've seen in the public markets over the last few years. And one of the issues that some of them ran into was they they didn't go and access the low hanging fruit, the quality ore that you kind of need to, especially early in a capex cycle. Um, how does that look for your project?
Yeah, the project, if we take with what we have already, I mean, given the underground developments play, given that the resources are, they're projecting at very steep, vertical sort of projections, that the amount of development meters you actually need to access, those are sort of lower, but you get immediate access to grade, which is pretty good. So one of the components in many development timelines, particularly underground, is the lead time into development meters. Got to get to the ore body, but effectively we're already there with the underground development that's already in play. So that actually enables you to access grade straight up.
Okay, so you said you're also looking at other brownfield projects. Now, I'm curious for you as a former analyst, and now you're still basically an analyst looking at projects. Uh, what's the bar look like, and how does this gold environment change what that bar looks like from, hey, this project is interesting versus say 5 years ago, if you were looking at something you maybe would have been hard pass. Today, we're sitting at $4,500 gold. A lot of analysts are calling for $7,000. How does that change things, and what are the projects you're specifically looking at in terms of framework?
Well, I think we're probably good with what we have. We spun out of Riverside on the Ontario assets there, and principally that was completely, I think that is a completely rejuvenated district, near Greenstone Gold Mine operated by Equinox. I think what you're seeing now, if we take a holistic view in terms of looking in brownfields areas, hub and spoke approach around operating mines works really well you don't need to discover huge resource bases to be material to an operating center. So if you think of it, non-producing companies often trade on an EV per ounce basis, whereas producers trade on a cash flow multiple. So producers are actually buying ounces, but ultimately they're trading those production ounces into cash flow multiples. So they accrete a lot of value through the acquisition of satellite resources coming into play. So there's a lower threshold. So I think if you're looking at brownfields areas, even greenfields areas within a working radius of an operating mine that could need material to grow their production base over the next 5 to 10 years, I think those areas have certainly lit up over the last 18 months of being something that's paradigm changing. So before, we'll call it since mid 2024, you ultimately had to go for looking for self-standing assets given the commodity price environment. Now I think your discoveries near an operating center that doesn't necessarily have to be self-standing is still of material value to the company finding that resource. So that's why I'd see that. In terms of what we have in the Yukon, that's 170 square kilometers is 2 times downtown Manhattan, 2 times the footprint of Zurich. We have at least 4 or 5 different project areas of different generational geological sort of styles there to be able to look at over the next number of years. Lots of exploration runway there.
So something that I love about this story is that you guys started out with a sort of more greenfield asset, certainly earlier stage, a nice looking exploration property. But then you guys went and you found this project in the Yukon, and the next thing I know, I'm talking with your VP of corporate dev or IR. I'm not sure which title he uses, and he tells me you guys have raised $15 million. When you put this deal together, and you thought I'm not to go raise some money, did you ever in your wildest dreams think that you'd be starting out with this much interest?
I think a little bit, yes. Simply because we were very, very confident. Like we started looking at Stellar in the end of 2024. It took us about a year's work to get that over the line. And in 2024, the Yukon was had a different sentiment about it. And then since then, commodity prices really lifted sentiment for resource-based tier 1 jurisdiction assets. So I mean, we love the geology, like the resource, and since that time, obviously the sentiment's really picked up nicely. So, yep, we could have raised more, let's just say, but we kept it there because I think it's pragmatic to be able to do that with that amount of money on the balance sheet. We've got well funded for a good program this year, up to 16,000 meters this year, and then well funded into next year. Like that's having that buffer. Now that gives us a lot of runway with that balance sheet and that amount of drilling, which we think ultimately to be able to phase us over time to larger exploration programs. So it's very exciting, very exciting.
All right, Geordie, last question for you. If you and I are sitting down this time next year, and I assume we're going to be speaking before that, uh, what does a successful first 12 months of operations after being public look like for you? If you had a checklist, obviously, you don't have control over what the drill bit's gonna pull up, but what does that look like? How would you judge yourself in terms of things you can control that you would like to achieve in your first 12 months?
Yeah, that's a really good question. I think it breaks into 3 components. I think positive execution on drilling, execution on success, not only obviously discovering expansion on the resource base, but understanding that the real 3-dimensional structural controls on the geology that constrains why resources are as wide where they are. And that's important. It's never been done on this project. Targeted, structurally oriented core is very important to be able to be more selective in where you're targeting your drilling to be able to discover more ounces. So I'd say successful execution on the drilling plan to 16,000 meters, an improved understanding of where to target more ounces and why, and in the backdrop, execute on our regional exploration program to build through a range of new targets for future discovery potential. So it just keeps the ball rolling in terms of resource growth, elevated understanding, more targets for more growth.
All right. Well, Geordie, thanks very much for hopping on, and I congratulate you guys on getting to, I'm going to say this, the starting line really, but in another sense, it's the finishing line of actually getting a company public. You guys have done a tremendous job. I know as a shareholder of Riverside who got spin out shares, I'm very excited to see what you guys are going to do. And I appreciate all that you've done for shareholders, and I look forward to seeing what you're going to do with the Stellar project.
Oh, it should be an exciting year. So looking forward to catching up with you after results.
The 2026 Rule Symposium on Natural Resource Investing is happening July 6th to 10th at the Boca Raton. With top names in mining and natural resources, market-moving discussions, and real insight for serious resource investors, if you're interested in joining online, click the link in the description. All right, everybody, thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. And folks, if there's guests you want us to have on here, or there's ideas that we haven't covered on the channel that you want us to take a look at, please just let us know in the comment section. We read every comment, and I promise you we consider all of your ideas. All right, everybody, I'll see you tomorrow.